Okay. Good morning, good afternoon, good evening, everyone. All right. This is your boy, ABBA FOREX, Mr. Augustus Emeka. I some time ago, I promised that once I was going to give out a free strategy that works well. You understand? So, this is me giving, fulfilling that promise that I wanted to give out. I want to give out a free strategy that works just as good. All right, so this strategy is based on technical analysis as before, and it's compilation of about two to three indicators. We have the Bollinger Band in the main screen. This Bollinger Band. We have um the stochastic oscillator. You understand? The Bollinger Band and the stochastic oscillators, and then we now have the fractals. This arrow is say on the top of this each candles. Most of the candles is call it fractals. And then of course in the stochastics we have the levels: free zone, sell, strong sell, buy and strong buy. In the sign, which is level 10, 20, 50, 80 and 90. So without further ado, I'm going to go to the setups. After I give out the setups, then I'll now explain to you how the strategy works, where you can find your buy, where you can find yourself, and what you'll be looking out for, maybe possible take profit, and how to put your stop loss when you enter a position, and what you need to do when your trades are in profit, and and so on and so on and so on. So let me go to the setup right now and then give you the setups of this strategy so that you can use. Just be gentle, follow me step by step. It's very easy to understand it. There's no complexity in this strategy. It's very easy, and it's something you can, on a glance, you can just pick it up. You understand? So for those who are not really familiar with MT4, MT5, I'm using MT5. It works as well in MT4 as well. It also works in PC as well, laptop, computer, and so on. But this is MT5, MetaTrader 5. So for those that are not very conversant with MT5, I'm going to make it a little bit comprehensive for you to understand. So you click this F button. This F button is where you go to find your indicators, all your indicators. Okay, you click it, and then this is all these indicators are here because I have choose them from where they ought to be and brought them here. If the, like for instance, now you that is starting without no indicator here, for a novice, for a newbies, a beginner, and as I have to click on this F plus here to bring out, like if you want to choose this Bollinger Band now, you click this F plus, and then you see Bollinger Band here. You understand? When you click on the Bollinger Band, it will bring this out, and you now set these parameters by yourself, and then click done. All right. So the main thing that we are doing here, just let me just give out the setups. I don't want the video to be too long. It's not good when the video gets too long. It becomes boring. All right. I'll make it snappy. First, ignore this Ashimoku. What we are going to deal with here in this main chart is the fractals and the Bollinger Band, and then the stochastic, and then this stochastic. That's the only indicators we are dealing with. Fractals, Bollinger Band, and then stochastics. Every other indicator here, ignore it. Don't even choose it when you're setting up yours, because I'm using it for a different strategy. You understand? which I'll find a way to hide it from the main chart from the screen so that it's not disturb or it don't interrupt or conflict with this strategy that I'm giving out. You understand? So you click on the fractals, you make your setups like this, you click OK, you click the F button, and then click on the Bollinger Band. Click on it, put all the settings, these setups, all these parameters and everything. You click done. That is on your main chart. Now when it comes to the indicator window 1, click that same F button and then click on stochastic. When you click on stochastic, it will come up like this. You set all your parameters like this on your stochastics, and then when you're done, then come to the level, click on the level, and then when you click on this plus sign, it will bring down about 5 folders, lines for you to fill. Then you click on them and fill in this number correctly. If you can, fill these write-ups. If you cannot, you leave it. If you can fill it, fine, it will help you. If you cannot, you leave it. You understand? After all said and done, put your pixel 2, you choose the color according to your making, how you like it, and then you click back. Understand? And then click back, and then this choose this color. Normal is always red and blue. Everything here okay. Then you click done. When you click done, your trade, your chart, your screen should be like this. Should be this way. You understand? So now this is how the strategy works. Follow me slowly. Now you see the Bollinger Band. It has a line below, there's a line in the middle, and there's a line on top. Now this line below is where when your market gets to that point, that's where you start looking for a buy setup or a possible buy. When your chart, your candle gets to this place, as in not just only get there, not just touch there, most times breaking out of it, that's when you start looking for a possible buy. And then when your buy confirmation is when we have another opening, as in the next candle has to close, as in let's say you're looking for a buy, it has to close on a bullish candle. Not just close, yes, it has to close on a bullish candle, or giving you some kind of price action, maybe dragonfly, or a doji, or a shooting star, or inverted hammer. If it's the other way, as in either way, it should be the wick should not be above the candle, it should be below the candle. Most of the wick should be below the candle. That's if you're looking for a buy setup. And then for further confirmation, before you place a trade, make sure the stochastic is at a strong buy area. Your stochastic should be at a strong buy area. You understand? Strong buy area. Then after the first close, when after let me use cross, after this market gets here, hey, breaks through, and then there's a buy candle here, close this candle, the next candle has to close bullish before you now enter the next candle. And when you enter this trade here, the next candle, when you enter this trade here, the next candle, by then your stochastic would have turned direction to a buy direction. You understand? So after it has turned to that buy direction, what else you need to look out for? The next thing you need to look out for is where to place your stop loss. Place your stop loss below that last open candle, the candle that opened, as in this bullish candle here. Your stop loss will come below it. You understand? Below the bullish candle. If why is your stop loss there? Because the next candle that's opening should be on its way upward. If it comes downward and triggers your stop loss, that means the market is maybe wants to, there's a news or something that wants to make the market to react and continue going bearish. But in most and most cases, it will just go up. You understand? You can place your this here could be the place of your take profit. You could place your take profit when your stochastic has gotten to the level of a strong sell or a strong buy, as in the opposite direction of it. Either ways. And secondly, once your market is in profit, the other counter are losing profit. Maybe your market is in profit. Learn to take your stop loss that was below here, bring it up above the entry position, locking in some profit, and then put your stop loss there, and then allow the market to do its thing. Allow the market to now do its thing and go upward. Did you get me? And also the same thing, we can do it vice versa. Vice versa, you understand? Like here as well. The market gets here to the stochastic in a strong buy, strong sell area, sell and strong sell above the strong sell area. The stochastic always the touch or go very close to your strong sell level. You understand? And then when you see this the next candle closed bearish, then enter. This is where you enter in this candle. Now this is the candle where you now enter, and then place your stop loss above here. When the market is in profit, you bring your stop loss below the entry position, and then allow the market to run. You can see the same thing happens here. You can do the same thing here as well. So if you check the market, you can see the same thing happened here. It can go on and on and on and on and on. You see something like this, You see that the stochastic is in position, but this the candlesticks, the charts were not in position because it did not touch this Bollinger Band or even breakthrough. Sometimes you can enter it, but you, it's risky. You can enter it with your tight stop loss and all that, watching it very closely. So, but mostly I prefer it touches the Bollinger Band or comes very close to it, while this one has given me this confirmation, and then I enter the next candle after this first candle has closed in a bullish. Now enter the next candle. You understand? So here again we'll have the same thing. After close first bearish, I enter the next bearish candle, place my stop loss in necessary places and wait for it. Then here, I think here it should have take your profit. Once the market got here, you should take your profit and then call it a trade. Understand? We have the same thing happened here. It continues everywhere. Look at it here. Continues everywhere. So this strategy is a free strategy. You can try it out. And see how it works for you. You can use it, and see how it works for you. Be very careful. Always place your stop loss. Implement money management and risk management in all your trades. Let it be a major principle. Let it be one of your major principles when you are trading. Don't just trade. Don't trade blindly. Don't just enter a trade and hope that because your mentor said this or because someone said this, the market is just going to go like that in your favor. It doesn't work. Excuse me. It doesn't really work that way always. Forex, the market is very crazy. Your setup could be like 110% good, and then the market will still go against you. So always learn to put your stop loss and your take profits in places, and always implement the risk management and risk and money management. Let it be one of your major principles and policies if you want to go far. Don't over trade, so that at least if you'll be able to hold trade. And then mostly I think this strategy works on volatilities and US dollar pairs. I've tried it on volatility and US dollar pairs. It works just well. I've not tried it on other currency pairs or other boom and crash and all other ones. But I think you can try it out and see if it works for you. Fine. But for the little ones I've checked, I've used it to trade with. It works well in volatility and US dollar pairs. This VL 10. Let's you look at VL 100 for instance, and you see it gives you the same reading. Look at here, 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 look at here. You understand? So it's everywhere it gives you the same thing, the same thing, the same thing, the same thing. So just use it to trade. Like you see what happened there. See what happened there. When you want to market in profit, learn to place a stop loss. See now this market turned and went back up. So if you did not put a stop loss, like I said earlier on, this market will put you in a negative. You understand? So always learn to lock in profits. Enter more than one position so that once the market is in profit, you could take first profit and then wait for the market to run further for you to take other profits later on in that time. And also I don't know about other time frames, but I know about 1 hour. If you want to trade, I don't know if you I think 1 hour works better. I don't know if you think you can still try it in your time frame, the one you're conversant with, and see if it will work out for you. I've not really tried it on all time frames, but I have only tried it in 1 hour time frame and it works in 1 hour time frame. So you in your own time you can still study it more. Try it in your own favorable time frame and see if it will work for you. If it works for you, fine. Yeah, it's good. If it does not work for you that time frame, just look for a different time frame where it will work for you. All right. So that is that for that. If there is any possible questions, if you have questions, you can chat me up on my WhatsApp and then ask me your questions and I'll answer all your questions based on this strategy. This is a free strategy, 100% free strategy. I'm not charging anything from anyone or from anybody. I am not taking anything, it's free. And I believe if you study it well, you use it to make milk money out of the market. You understand? So I usually advise my students and my clients. Once you get a strategy, no matter how good it looks to you at the first instant, first of all trade with it in demo for at least a week or two, and then calculate your profits and your losses. If within the space of that 1 weekend or 2 weeks, if you've made more profits if you've made more profit than losses if you made more profit than losses, then you can now choose and decide to go live with it. But if you've made more losses than profit, it is not time for you to go live yet, real life yet. Continue and study it, and then when you get it right, when you've gotten it very right, and then you've got to a level of making consistent profits, then you can now think about going live with it. You understand? This is what I usually tell my clients and everybody I tutor, and then everybody I mentor. I tell them this all the time. All right. So um all right. So that's that for that. You have a great day ahead, and then Subscribe and like. If you like my videos, subscribe my channel, like my videos, and maybe say one or two things and tell someone about it. All right. Thank you so much. God bless. Grace.